Well, good morning, traders, and certainly a fairly flat open expected for the ASX 200. We're looking for the market to test the neckline of the recent double top around 57.91. I think if we can get a close back above that level, obviously that'd be positive. It's not going to be a tall order then to see the market pushing into back above that 5800 level. It's going to be hard to see what's going to really drive that today from a sectorial basis. The iron ore price was up 80 basis points on the spot market there, but we saw fairly subdued moves coming through in iron ore and steel futures and coking coal futures. If you have a look at Vale's US listing, that was up 0.8% as well. So, that suggests some of our pure plays like Fortescue and Atlas may see some slightly positive open. But I say BHP's ADR is indicative that the stock's going to remain fairly unchanged. We're keeping an eye very firmly on the oil market as we will going into the OPEC meeting on Thursday night. Energy looks quite subdued as well. I mean, if you look at the US crude price relative to where we were at 4 o'clock, it's remained fairly unchanged. So there's no real move to be priced into the energy sector when that opens at 10 o'clock. But we do think that it's going to stay fairly well supported going into that meeting. But as I said yesterday, there is a real risk that we get a buy the rumour, sell the fact once we get the announcement that we're likely to see the output cuts being extended for another 9 months. The new news that we saw overnight is that Iraq have come to the party and expressed the desire to push that extension through, but the lack of reaction in the crude complex suggests that it is, fully discounted into the market as well. If we take a step back, I think the lead from Wall Street has been fairly positive. We saw the S&P pushing up about 0.5%. Tech's working really well, so the bullish market of choice continues to be the Nasdaq over the Dow and the S&P. That's the market that's exuding the strong, powerful uptrend there. We saw good buying in industrial stocks that could resonate with us today, but energy and mining stocks took a bit of a backseat. They were flat on the session there as well. Financials were up 30 basis points on the S&P. I think probably one of the big talking points on the floor overnight was what happened on Bitcoin, which continues to go absolutely bananas. That traded in the $299 range last night. We saw huge flows coming through in Bitcoin overnight, both two-way, buyers and sellers. But the conviction to push price up, is sort of dissipated a little bit. But it seems like the sellers are getting somewhat of a bit of a hand. But shorting Bitcoin, has been a disastrous trade of late. So it's going to be one that you have to tread for very, very carefully, and you have to be nimble. But certainly huge ranges that we saw last night. Is that a capitulation move of sorts? Yeah, we'll have to see. The other big talking point is what's happening in euro. When you saw Angela Merkel coming out and saying that the euro's too weak, well, that's a red rag to a bull. But I do believe that euro dollar is starting to get a little bit extrapolated from economic reality at 112.50. If you look at a yield spread, the traditional fundamentals of what we're seeing now, I think euro dollar probably needs to mean revert somewhat down to sort of a 111. If you look at positioning, the dollar's very, very under-owned at the moment. The euro's over-owned. So I think from a positioning perspective, from a fixed income perspective, euro dollar should probably trade a little bit lower. But we're waiting for a little bit more of a blow up before we start looking at some mean reversion there. But certainly the fact that Angela Merkel has talked about it being too weak has caused some upside for euro dollar. Euro yen probably is a better trade on the long side if you want to express a positive view on the euro. And I really like euro sterling as well. We're seeing a few negative flows on the pound, and that's broken out to the highest levels in a month or so in euro pound. So that looks probably technically the better trade for me to be in as well. Elsewhere, for people who like a little bit more spicy, have a look at the HYG, the high yield ETF. That's broken to the highest level since 2015. That looks like it wants to go higher. Now, the interesting thing for oil traders out there, we've got this natural headwind in the oil market, which of course is where the US shale gas guys are getting more and more out of the ground. They're pumping out and making great profits. And that's because large amount of their exposure is funded from the debt markets. They'll go out because credit spreads are very, very cheap. It's very cheap for these guys to raise funds, extrapolate more from the ground, and then pump out at a good margin as well. Some of the break-even levels are, down at $20 for some of the bigger producers of shale gas. So raise money in the debt market, increase your debt allocation of your capital structure, get more out of the ground, and pump it out for a good margin. And unless corporate credit spreads blow out, we're not going to see that rig count moving lower, which of course would be an oil positive. So, my trade of the day is having a look at HYG, the high yield ETF. I think that trades higher in the short term. It's a trend follower's dream at the moment, and that's something for people who want something a little bit more left field. That looks like a really interesting trade of the day.